biggest scars are on the lender's side. So I think what Dan said, everybody needs to take note of is we're looking at it the same way with our private money. You have to correct ahead of the market. If not, if I'm giving somebody a 20% down loan right now at 12%, and then the market makes a soft correction, that 20% could disappear rather quickly. So we've moved to wanting more money down, 30% down, possibly 35% down, and taking a harder look. I do agree with Dan. I think there will be a correction. I don't personally think it's going to be anywhere near as drastic as what we saw back in the day, because we were not asking for enough skin in the game. I think the lenders are smarter now, even if the investors aren't. I think that we have a little bit more insight, and we're not going to get in the same amount of trouble.
Could you give us just the hard money lenders just an idea of what the spreads might be between the different kinds of loans that people can get? You've got the bank conventional, and then you go to the mid-level product you're talking about, and then jumps up to the high, to just hard money lending. Just so people have an idea of what the different spreads, the interest rates would be. Okay,
so the conventional minimum down payment, if you have over a 700 credit score on an investment purchase, is now 15%. It was 20% for a long time. Now you can do 15%. Your interest rate on something like that is probably going to be around 4.875% on a 30-year fixed. You don't necessarily have to pay any points on a conventional product. The next would be your subprime product. Your interest rates are going to range on an investment purchase from anywhere maybe around 7% in a very, very good case with a nice down payment and good credit, as high as maybe 9.25% if you're not proving your income and your credit is terrible and you don't have as big of a down payment. You're looking at usually at least 20% down on that. And then I'll let Dan jump into the hard money. We're probably very similar on that with our interest rates and down payments.
Sure. So right now, hard money loans are ranging anywhere from 10% and 2 points to 14% and 3 points here in the Tampa, Pinellas area. I'd probably say the average right now is 12%, 2 points at closing, anywhere from $500 to $1,000 in document preparation and closing fees, and that's pretty much the average product right now. I would say lenders are at around 70 to 75% LTV, and they are requiring you to prove that you have funds to escrow in order to complete the rehab yourself. That's really, really trending right now, versus lending you the escrow money.
Any of the panel doing any ground up construction related financing, anything? No, okay. What about, Frank, this is probably for you, the portfolio, local bank loans? Are you doing any portfolio local bank, and what is that looking like?
So a portfolio loan is basically still a bank loan, not exactly a private money loan, but we're holding the money either through my financial institution or through one of our partners where they make their own rules. Very similar to a subprime loan. You get to make pretty much any rule you want. You don't follow Dodd-Frank if it's investment. Portfolio lending is very similar to subprime lending. I think subprime is taking over portfolio. Portfolio to me was the most popular between the downturn of 2007 when things got really bad through about 4 years ago. I've kind of seen it go to the wayside because subprime is coming back into the market.